Tesla stock back in the green today by about 3% and retesting major resistance after Elon just visited China for the first time in about 3 years and had some very positive things to say about their relationship. We're going to get into that here in this video, as well as give you guys an update on the debt ceiling and big catalyst that are to come. So let's dive straight into it, ladies and gentlemen. First things first with Tesla. Tesla is up 3.19% here today. And Tesla is back in the news because Elon Musk meets with China's foreign minister. This is the first time that Elon has went to China in this business official meeting atmosphere in about 3 years. And it says Elon Musk met with China's foreign minister Guo Zheng on Tuesday as Beijing pushed to show it is open to foreign business, and the Tesla CEO reportedly signaled further expansion in China. The meeting between Musk and Zim comes at a time of continued tensions between the US and China over technology. Quote, Tesla opposes decoupling and is willing to continue to expand its business in China, according to a statement from the Chinese Foreign Ministry. Now, for the obvious reasons, this is bullish for Tesla. Lower costs to produce their vehicles. A lot of the raw materials that are needed for electric vehicles are also sourced in China. So less of a supply chain issue just to produce them in China and then ship them around the world. It's going to mean hopefully better margins for Tesla. And obviously, do I even have to say this? China is a huge market for EVs, and this market will grow for years and years to come due to their population, right? It's no surprise if you have a 1.3 billion people population, that's going to be a pretty good market to be a part of. And I don't think Elon is a stupid guy by any means, and seeking to, make this relationship stronger, I think it's just going to be a positive thing for Tesla, for national security, for a lot of different reasons. Quote, Zin says Chinese style moderation, characterized by a huge population and common prosperity, will create unprecedented growth potential and market demand, according to a statement from the Chinese Foreign Ministry. He added that China's electric vehicle market, quote, has broad prospects for development, and that China will continue to open up and create a better market-oriented and law-based business environment for foreign firms like Tesla. So obviously this looks like a positive for Tesla here over the next couple of months, the next couple of years. To strengthen the relationship with China could bring some pretty good benefits to Tesla. Like we previously just said, the population alone, the math supports Tesla's business dramatically. If Tesla is targeting 2 million vehicles to be sold in 2023, well, China has a 1.3 billion population. They go through 25-50 million cars every year. That's a lot of growth that Tesla could see in that market, even if they capture a 5, 10, 15% market share of new vehicles being sold. For obvious reasons, Tesla stock is reacting positively to this. Now, with Tesla's stock, you are approaching major resistance with Tesla, and actually today you hit a high of $204.48 per share, and you have since fallen under $200 per share. Now, the key level with Tesla is really this 200-day moving average. The 200-day moving average is at 199.79. Tesla stock currently at the time of recording this video is up 3.3%, sitting at 199.60. You are within 20 cents, 30 cents from this 200-day moving average. If we get rejected from here, any downside target would be about 190, down to this downtrending resistance level that we previously broke out above, and that was literally the break of this happened today with Tesla's 3% rally. It would be back down to this line, and then you likely consolidate from there, depending on what the markets do with the debt ceiling and all of that. We'll talk about it here in this video, but that would more or less dictate where Tesla and where the broad markets are going to go. Now, if you hold an break out above, again, this 200-day moving average throughout the rest of the day today, that's going to be a very positive thing. But if you look at the MACD is in positive territory and just broke above neutral a couple trading days ago, does to me signal that there could be further upside here. If you look at the MACD over the course of Tesla's last couple year history, you can get massively overbought on the MACD. Like, look at these humps. They're very large. Tesla's not even really started a hump yet, just at the base of one. So the rally from here could go much, much higher. If you do break out above the 200-day moving average, then you start to target about 250 to that upside move. And that would really be my base case if you break out above that and if the debt ceiling does get resolved. Now, the RSI over the last couple of days has really went higher here. And the RSI would be the one negative that I would point out with Tesla. Now, this is all relative strength. So this means that Tesla's just went up a lot recently. And once you get over 70, that is overbought. And with Tesla, historically, once Tesla gets overbought, it can stay there for a couple days, but you do tend to consolidate out or trade down. So a consolidation from here above that 200-day moving average would kind of be expected before a move to 250. If you broke out above 200, you traded in between the $200 and the $205 range, that's what I would want to see for a couple days. Now, keep in mind, Tesla stock overall has trended down, so this 200-day moving average will continue to trend down as well. Last week, the 200-day moving average was at $202. Now it's at $199. If you get above the 200-day moving average and you can hold this and just find this as support, the 200-day moving average, if it starts to creep down to 195, 190, and Tesla can hold up at this $200 level, this real key level, and there we are, Tesla just broke it again, then I think that would really create an environment for the RSI to come down, for the MACD to remain bullish, and to give you enough room to make that run to 250. Now, keep this in mind as well. I don't think a lot of people are fully understanding the importance of what happened at Tesla's shareholder meeting. Advertising. And if you've watched me, which a lot of you guys probably don't on a daily basis, advertising is massive for Tesla. Tesla has not advertised before. The population does not know about Teslas. If I go ask people, what kind of vehicle they want or what kind of vehicle they're looking at buying, Tesla's not even on the radar. People laugh when you say, hey, I want to buy a Tesla. People just don't understand. They're like, are you going to get stranded on the side of the road? People don't understand a 20-minute charge can give you days worth of average commuting. People just don't have the knowledge. I think Tesla's advertising is going to create massive demand for Teslas. After all, Tesla sells a fraction of the vehicles that GM sells, but their margins are much better. But what does GM do above, Tesla or many other automakers? They advertise. People know about a company like GM or Ford. People don't know about Tesla. It's all word of mouth. And to think Tesla got this far off of no advertising, just wait to when Tesla does advertise, what kind of orders you're going to see and what kind of production problems you're going to see. Ultimately, I think when Tesla advertises, you're going to see a production constraint, not a demand problem, but Tesla not able to produce enough vehicles to fulfill their orders. So just wanted to give you guys that. Now, let's talk about the debt ceiling. Now, really the big story of today, and I would say the broad markets over the next week or two, is going to be the debt limit. And what you're seeing today, not very encouraging. So there is something called a House Rules Committee. This contains of 13 members, 9 of which are Republican, and 4 of which are Democrat. And what this essentially is they rule on different bills to see if they are worthy of coming to a vote, see if they can come to an agreement, kind of like you go through the House Committee on Rules, so you're not voting on 100 bills a day, basically. And what you've heard from some of these members that are on this committee, keep in mind there's only 13 members, is not so positive. As you guys can see right here, GOP opposition is growing for this debt limit bill. And some key members, such as Chip Roy, he's a Republican from Texas, he's saying that McCarthy should throw out this bill, that we should push the pedal on not raising the debt limit unless there is serious concessions here, because you're still going to be adding $4 to $6 trillion in debt over the course of 2 years. Republicans are saying this is not fiscally responsible. So what's going to happen is 3 p.m. Eastern time today, by the time some of you guys are watching this video, you're going to get the House Committee on Rules that will be voting on this. Now, they're giving their speeches as we speak, so it could be before 3, could be slightly after 3. But either way, by the time the markets close or shortly after, you are going to get news whether or not this bill will be brought to a vote in the House. And it's looking like a real 50-50 kind of situation here. So it's hard to say what's ultimately going to happen, but any pushback of the debt limit, maybe not getting raised, maybe pushing this out to a possible default, is not going to be a positive thing for this market. And after all, this market has already fully priced in the debt ceiling getting raised. So if the debt ceiling does not get raised, you're going to have a big problem on your hands. And that's why kind of markets today are pretty dang choppy. This is the NASDAQ kind of selling off in the morning with a couple pretty big sell-offs throughout the day today. Same thing with the S&P 500. So people are definitely getting quite jittery out there, and obviously for good reason. Now, we did get economic data as well today. So the economic data that we got today was the Dallas Fed Manufacturing Index. This index came in at the worst that it has in a while now. In the last 5 years, minus the COVID, if you want to call it recession, COVID crash, it's at the worst level in a long time, maybe 10 years now. 2016, it dropped to about the same level, but you are right here with recessionary territory. Now, people were expecting a negative 25 reading. It came in at negative 29.1. So manufacturing in the Dallas area not looking so good, and that was a very recessionary data point. Now, what you're going to have over the next couple of days here, really throughout this week, if you wanted to categorize this whole week in really one or two catalysts, you're going to have Wednesday, the JOLTS job openings. This is a reading of how many jobs are available in America. And a couple months ago, you were over 10 million. And for the last couple of years, you were over 10 million. You broke under 10 million. This caused a sell-off reaction in the markets, and you've been dropping over the last couple of months. And you are expecting this to have dropped in April to 9.2 million job openings. Now, the big data point of this week is going to be Friday. With the unemployment rate for May, you're expecting that to be 3.5%. It's currently 3.4%, so a slight uptick. And then non-farm payrolls, you're expecting those to grow 180,000. Last month, in the month of April, these grew by 253,000. So you're expecting a deceleration in the labor market. Coming from the data on Friday, we really haven't seen evidence of this yet. You'll get a one-off, initial jobless claims or some kind of data point that shows maybe the labor market's starting to weaken, and then it just comes back full steam ahead. So that's going to be a big question throughout the rest of this week. Now, at the same time, markets are now firmly pricing in another Fed rate hike in June. It went from a 99% probability of a pause now to a 66.6% chance of a rate hike. So markets have completely disregarded this. Markets seem to not care about this at all, but you're now expecting another rate hike. Whether or not the markets start to care about this, well, we'll see over the next couple of weeks here. So there is kind of what is happening on the day today. Big story is going to be the debt ceiling. Again, they meet. The House Rules Committee meets today at 3 p.m. to formally vote if this will come to the House floor for a broad vote. And if that gets rejected, expect some downside in the markets. If it goes through and if it's passed, I really don't expect a huge bullish reaction. But again, that is a possibility, but I think the markets have mostly already priced this in. So that is it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section if you guys made it to the end of this video. Thank you for watching, and I will see you in the next one.